Hello guys. I hope you're grand day, hope you're having a nice Sunday today. But it wouldn't be a complete Sunday without a chat from this channel. So I know I haven't been very consistent lately with uploading videos, but I'm trying. I've been very busy, but I promise now, going forward, I'll try and give you one market analysis chart or one video every single day, every evening around this time. I'll make sure that I upload a video every single day. So make sure that you do come and check out the new videos that I'll be putting every single day. And if you haven't subscribed, make sure that you do so, because on this channel I basically share market analysis videos and other price action concepts that I think are important that you should know. And if you're interested, also all this stuff that you're seeing in my videos, if you like this style of trading, I do have a mentorship and I take a new group every single month. So I take you on a mentorship for an entire month to equip you with all the skills that you need for you to be able to approach a chart only one on your own and know where to start, what to look for, and stuff like that. So if you are interested, you just leave a comment or you can text me on Telegram, and then we'll take it from there so that you can join in the next coming month, which is we are left with about a week or so. All right, let's get started. So the first chart that we are going to look at tonight is our favorite Nasdaq. So a lot has happened this past week. Some stuff that we didn't even think it will happen. But let's just get started and see if there's anything new that we have here. So as always, when you're doing your market analysis, you make sure that you start with the highest time frame just to get a view that side before you move down to those smaller time frames that you are going to be taking your trades on. So the concept of time frame combination is very important. It's very important for you to understand how these time frames are linked. Which ones do I think will be best for me? So those are the things that you need to understand. So in the mentorship, I unpack all of that so that at the end of the day, you know how to pick the best time frames that will work for you, and you stick with those time frames. So this is our monthly chart, né? So on the monthly chart, what do we have? The price is back at the support area. This is the support area, this one here. So this is the monthly support area that the price 3 months back it came and tested it there, and then it pushed up until here. This is the highest point that it reached. We were having at the time, even now, this is the resistance that you have. This is your support and this is your resistance. Basically, we just want to see where's the nearest support, where's the area where the nearest one where the price might struggle to break to the downside, and where's the area where the price might struggle to break to the upside, basically. So this is our support that was tested, and we've been calling for buy trades. We're saying that the price is most likely going to be rejected from this area because it's a very nice area of support, and it's on a higher time frame. So but we were thinking that it will push until this, at least, until the opposite structure is hit, which is the monthly resistance. In this case, that did not happen, which is why you must always make sure that when the price is moving nicely in your direction, don't just leave. There are people who will tell you, no, I don't trade with the stop loss. I'll be watching it. As long as it's moving in my direction, I'm not going to do anything with my stop loss. But remember, you won't always be on your chart. What if during that 3 hours, 4 hours, when you're sleeping, something happens, the market crashes, it's coming down very hard, and you don't even have stop losses? You were in some nice profits, you did not lock that. So now the price is coming back because you were expecting it to reach a certain point. But remember, you don't control the markets. If the price wants to turn before it touches that resistance, it will do so, like you're seeing here. So which is why trade management and risk management is very crucial. Just because you're moving in the right direction does not mean the price can't turn. So when the price is moving in your direction, make sure that you always trade that stop loss. So in this case, we didn't touch the area of resistance. We test and we are back at the support again. So in this case, those ones who want to make sense of what is happening on the highest time frames, you will say that between the bulls and the bears currently, the bulls are not that strong, because look what they're doing. Remember, when we hit the support, we expect to find a lot of bulls there, and we expect that they will be in control and push the price until they encounter resistance, until the resistance or the sellers are a lot and they overpower them. And that is most likely going to happen at the resistance or at the bearish trend line. In this case, the bulls were pushing up, but they allowed the sellers to defeat them even before they could reach the zone of the sellers. So that's the first sign of weakness in the bulls, in their what? On the monthly chart. So the bulls, they try to push up until the resistance. The sellers manage to push them again at the support. So if you want to trust, you can trust them, because remember, this is a higher time frame and we don't predict that the higher time frame structures are going to be broken. So for as long as you don't break them, we are still gonna trade in their direction. So now, because we understand what is happening at the support, the last time it pushed the price, it just failed to push it until the resistance. So now, if we want to give them a second chance, we are still going to be a little bit worried because of the bears they managed to put strongly to the downside. But until they completely defeat this support, this is going to remain as a buyer's territory. So that's why we can search for trades to go up again. Unless if we don't get any reason to enter and then the sellers do this, then that's when you will say the support has been taken out. Let's find the next one. You mark it there. You can search for your trades to the downside and hope that the price will get there. But until that happens, we are not going to say we are selling because the location does not allow us to do so. So to cut the story short here, we can say that the price is at the support, and the support, the only negative thing about it is that it is not fresh. It was hit before, but it is still a very nice looking area of support. So we are more than welcome to search for trades to go long. So going short currently, it's not a good idea. So you've been getting those trades to go short, but now because the monthly support has gained control, you have to hold, stop with those sell trades. You can maybe trail the stop loss. If let's say you have a sell trade that you have that's running, you've been getting it from there, you can put your stop loss maybe somewhere there and just say, just in case the support is broken, I will still have a trade running. But you can't execute more trades currently because of the location. So that's all that you have on your monthly chart. Let's see what we have on our weekly. So the same thing on the weekly chart. So let's see if we can find, okay, it's fine, we'll just use the one that we have here. So this one, if you've been following this channel, you would each and every week there's a new chart on Nasdaq, and we will always start with what, so that we remind each other this line here to say that when the price was moving down and it hit that, remember when you touched that, remember on monthly, when you touched that monthly support for the first time, it was at this point. From there, the price just got rejected and went all the way up strongly, very strongly. So which means now, because of all that just happened, then this becomes your what? Let's remove this. This becomes your nearest support on this chart. So if this is your nearest support, and look, I want you to pay attention here because there's something that is happening. Look, this is your nearest support, right? Because this support gave us a strong move to the upside and broke the nearest area of resistance, and it broke this trend line that we have here. So that's why we are saying this is a very strong area of support, and now the price is back at that support. So that's why you are saying you are expecting the price to be rejected. But if you look at what is happening here, you will see that even to the left, you see that there is something. Someone might have said their support, maybe they prefer to start it somewhere up there because of the candlesticks that they have around there. So that's the argument that we can have, but we will never come to an end. That's also fine. So if that's the case, you can say that the support was hit and then the price got rejected. We had a very nice bullish engulfing. If you can look at what this white candlestick here did, it engulfed the previous candlestick. So when you are at the support and you're getting a bullish engulfing, that's a very good sign to say that yes, the bulls are what? They could be, they have won, they're defending their support. But in this case, those bulls, their engulfing just ended there. Next week, they failed to even reach the high where the price turned before coming to test the support. So what happened was that the following week, the price, what did it do? We have what we call Now we are no longer having a bullish engulfing, we're having a bearish engulfing. This is a very, 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 very strong sign to say that the bears are not completely out, because what we were expecting, or what we normally happens, is that because we know what happens at the support. The support is a territory for the buyers, so that's why you have a lot of buy orders. So once those buy orders are filled, we expect them to create a demand and then push the price up. So, but if that's the case, then we would expect the bulls to be the one in charge, and the price will just rally to the upside. But now, when you start having things like this, where there is a bearish engulfing, which means that the bears are still very strong, why are they dictating the price at an area that belongs to the bulls? So that's the first sign to say, hey, these sellers are not completely out, and they even managed to push again to the downside. But the bulls are not completely out, because remember, for as long as we don't have a new high, then the bulls are not completely out. So you are not wrong in trying to look for trades to go long, to say, I mean, that I'm still inside that weekly support that broke everything, that changed the structure. So maybe the price just wanted to give more discount by going deeper into the zone before taking off. But we are not saying that's going to happen, but that's most likely to happen. Unless if the price comes down and give you a lower low, then all of this is gone. You have to have a new trend line like that, or you can even put it there. That's also fine. So I hope you see where we are going in this. So currently we are inside a very nice, remember on monthly, you were inside a very nice monthly area of support, and we are also inside a very nice and strong area of weekly support. So which is why trying to search for trades to go long is not a bad idea. But you need to keep in mind that something happened here. Those sellers, when they changed, reversed everything. So this is where they left an imbalance. So when you're getting those trades, if you get trades to go long, you shouldn't just avoid this. So that's where you can start to take out some of your profits and move to break even should the price fail to break that. All right. So that's why you must never, ever, ever predict that a key structure is going to be broken. Once it is hit, if you are trading to the upside and then you hit a bearish structure, all you have to do is to make sure that you exit. You don't have to predict that it's going to be broken, because if it is not broken, you are going to feel the pain. You won't forgive yourself, because you'll be like, I knew that this is a resistance. Why didn't I close? So to avoid such, you just have to make sure that you take your trade. When you hit the next opposite structure, you stay on the sidelines. You can leave one trade running and then lock some profit, put it on break even, but that's not the main trade. That's just the trade that you just want to leave there and say, I just want to see how far it can go. You can do that, but you can't do that with the only trade that you have running. When you know that your account is still small, you can only take one trade at a time. Just make sure that your goal then is just to grow the account. You're not going to try and swing your trades, and no, there you just need to make sure that when you hit the next opposite structure, you are out. So here, if we want to conclude, we can say that we are still searching for buy trades because of where we are, and because of what we have there. This has to be the first stop sign, the first stop. So that's where you're gonna try and exit there should the price bounce. But if it doesn't give you a reason to enter, it means it's just gonna break this like that, then the structure would have changed completely, but that is less likely. Let's just, for now, we are leaning towards buying, because even on monthly, we know monthly is saying it is at a monthly support, but anything can happen. But we're just saying we're leaning towards going to the upside. So that's all that you have on your weekly chart. Let's move to the daily. So basically, this is what I teach. I make sure that I simplify everything for you. So if you want more of these lessons, much more detailed, and where you can even ask any question you want and stuff like that, then that's where you have to try and come to the mentorship. So that's where you'll be able to ask me any questions. We can have a session, we can do all of this so that you understand it even more. So now this is our daily chart. Our daily chart looks something like this, right? So we can say that it is strongly bearish, right? So we can put your thing there and say there's something here. We do have this, or you can just keep it there. But even if you keep it your nearest structure around there, that's also fine. But currently we are not trying to say should the price go there, we will sell. Why? Because if it pushes up here, I want you to listen to this. If it pushes up from here and then go up there, it's like it is reacting from that monthly support. It is reacting from the current weekly support. So why would I try and sell on my daily and push against the monthly support or the weekly support? So that's not a good idea. So it is never a good idea for you to go against the higher time frames. You need to know where the price is coming from. That's why I'm saying you don't go against the bigger structures. You don't fight against any structure and predict that it's going to be broken. So here, just to cut the story short, or if we were to conclude quickly, we can see that, where is that rectangle? So this is our daily support. This is our current daily support, right? And remember, this is remember the lowest point of our weekly zone. Remember the weekly zone was that big. So that's why I'm saying the price penetrated a bit and just went to the to extreme of that zone. But it is not yet broken. We are still inside that weekly support. That's why I'm saying we're still pushing to search for trades to go long, even though the price seems to have like penetrated a bit. For as long as it doesn't make a lower low, we can still search for trades to go down. The only way you can say, oh, the bulls are out, is if the price breaks this. So this is the last line of defense for the bulls. And let's see, the price just tested it, but that's not enough for us to say it can start moving to the upside. So maybe you can just, if you, let's say you are executing daily, maybe if you want to be convinced, you can wait for momentum shift where the price will go up and break your trend line, and then that retest, you can catch it and hope that the price would start a new impulse move after that. But here we don't have a lot of stuff. We can just say, in conclusion, on our daily chart, the price is testing a daily support. We don't yet have a reason to go in if you're executing here, but maybe if you get a reason to execute, you will target that, because this year you can mark it, but it is not a good zone. Look at the types of candlesticks that you have there. So that's more the information that's given in the mentorship. So I can show you how to identify zones, then I'll still show you which zone scores higher, is higher odd. So this one, you have to tell, what do you call this? You cannot talk about that one. It's not a good zone. This is a proper one. So that's why if you get reasons to go long, maybe we'll target that. But remember, you still have this. And as much as you can say you are bouncing from the weekly zone, this structure here on daily is not yet broken. You cannot neglect it. So let's go to H4 and see what we got that side. The bears have been very, very strong. But now, this is where things start to get interesting. We tested that. Remember, this is the daily support, which is inside the weekly support and the monthly support, right? So that's why you being able to identify the sensitive areas on your chart is very important, because that's where you know that when I'm searching for trades, these are the areas that are most likely gonna give me what do you call this, that are gonna reject the price. So look what the price did. It tested that daily support, and then the price got rejected. You have got that nice looking bullish rejection candlestick. So on this time frame, the next structure will be there. So you need to make sure that when you're talking about the negatives, the next structure, it has to be on the time frame you're trading on or higher. We don't go lower. So here you'll be targeting maybe this as a TP1 and then TP2 at that maybe daily resistance. All right. So, but here we can see that the structure, yes, is starting to show that the bulls could be coming in. Maybe if you know, because remember when that structure was formed, it was formed on a Friday, and a Friday is not a good day to execute, especially in the afternoons where you're going to be planning to execute a trade that you're gonna hold for long. But if it's something that's gonna be intraday, in out within a couple of hours, you can do that. But in terms of you holding a trade for more than a day, you can't execute it on maybe like Friday in the afternoons and stuff like that, because we are about to hit the weekend. So what if the price opens with a gap and then jumps and comes here? So you're going to be affected a lot, right? So here, if the price maybe goes outside the trend line, then you can use the same approach that I said you can use on what? on the daily, that retest, and then you target it, and then you push the upside, because I really think that this is gonna, because this is the last line of defense for the bulls. They have to try and protect this, which is why we are giving them the benefit of the doubt and say what, at this area, at this point, they are the ones that have got higher chances of what, pushing the price from here, pushing the price in the to their direction. So from here, the price has got higher odds of going there than going below this. But anything is possible. If you get a confirmation to go long, you can take that. But currently, you can't talk about selling because you are inside very big areas of support. So selling into those zones is not a good idea. Not a good idea at all. So that's all that you have on this time frame. So it could be a confirmation where we can expect the price to push up, or if you're not convinced enough, you can wait for the price to sort of pull to the upside, break that so that they can change the structure. Then when you get the pullback, you can anticipate the next impulse move to the upside. That's the one that you're going to be targeting. So let's just do one more H1, even though I hardly look at this one. I don't want to go too low in terms of the time frames, because I know that when you're on the smaller time frames, there's a lot of noise sometimes. You might end up getting trades even when there's nothing. So there you can put your trend line somewhere around there. You can see what I'm doing. So you can see that on this time frame, if we are to comment, we know where we are located. This is a daily support. We know where the price is coming from. So meaning, even though the price is still bearish on this time frame, the structure is still holding. None of the key structures have been broken. We are hitting a resistance. We cannot sell this H1 resistance because the price is bouncing from a daily support. Why would I want to fight that daily support with H1 resistance? Yes, the price might move down, but that's not something that is worth you risking your money on. And again, another thing that we can see from this is that we have this, which is a bullish engulfing. So this is a good structure, especially when it forms at the right location, because it's a bullish confirmation structure and it's forming at the bullish zone. It's a good thing. So, but now you're late to try and buy. Maybe if on this time frame the price was to do this, yes, this is what you can use. The price was to do this, you can say that bearish trend line taken out, resistance taken out. So momentum has shifted now. So because of where you are, you have got a backup from the daily support, the weekly support, the monthly support. Should the price pull back, you can then buy. And hope that this is where the price will start that new strong upward move to the upside. So that's what you can look for. So selling right now, hold on with that one. Do not sell. I don't think it's safe for you to sell unless if the price, you're just waiting for it to show you that value, the best have won. By doing what? If they break this support, they would have went lower than that weekly one, and even the monthly one, they will be moving towards breaking it. Then that's when you can say it opens more room to go to the downside, because the bulls that could defend that, they have been defeated. But until that happens, we cannot sell right now. It's not a good thing to do. You can wait for momentum shift on this time frame if it's an execution time frame. Even if you're trading smaller time frames, you feel like H1 is too big for your account, it's fine. You need to make sure that you get the momentum shift. You're only focusing on taking trades to the upside right now. We understand last week the price has been dropping, but the price can't drop forever. When it hits a strong zone, we are now expecting what? A pullback or a rejection. If that doesn't happen, it doesn't happen, but we are going to lean towards the upside because of what? Where we. So the best thing to do right now is to say I'm looking for trades to go long, and you start planning what type of trades can I take, what is it that I must wait for it to happen first so that I execute. So there are different ways in which you can wait for confirmation. So that's more like the stuff that I go into details within the mentorship program. So if you are interested in this style of trading, you will just leave a comment. So but with that, what I've given you on this video, you should be able to capitalize this coming week. So I'll try and give you one video each and every day. So if you're interested in this style of trading, you will contact me, and then I can add you in the next group that's going to start with their lessons probably the first week of October. All right, we'll just see how it goes. So if you're interested, you can join in that group. But otherwise, the videos that I put on YouTube, they are really not bad. if you are paying attention, you should be able to sort of to know what to do, what to look for, and where to be, to anticipate a push, a rejection and stuff like that. So these videos that I put here, guys, I really hope they have, because the comments that I'm getting, I can see that the videos are, they're on point. So I'll continue to give you the videos, and when you are ready to join the mentorship, you will just contact me. So with this one, the Nasdaq, it ends here, guys. So if you haven't subscribed, do so. And you can even, if you feel like the content that I'm sharing here is helpful to you, and you know someone that's also interested in learning how to trade, you can just recommend the channel to them. It's very free. They can also watch the videos. It's a win-win scenario. You are not gonna lose anything by just sharing the even if you just recommend it, even if you don't share the link and stuff like that, just recommend, say, you can check out this channel on YouTube if you feel like the stuff that I'm sharing here is worth their attention or it's helpful. All right, guys, those that are interested in the mentorship, we will meet that side. But otherwise, this is all that I wanted to share with you guys with regards to Nasdaq. So that's what you can expect anytime from Monday going until Friday. So because I've challenged myself to say I'll give you one video each and every day, we will probably have an updated setup on this one alongside the week. All right, guys, I'll see you in the next video. Thank you.